All right, what's up, guys? It's Friday afternoon. We just closed. I was out doing some errands. Got back a little late, but I wanted to just go over the week. We had, a ton of buying. Of course, the market was down all week. I was in court at jury duty out now, but that's all taken care of. So we'll start next week off on Tuesday. Remember, Monday's a holiday. What are we looking at here? Go over it. Scans come out Sunday. If you're looking for information on what the Fed is fixing to do, there's rumors out there that the Feds are moving towards a CBDC, a central bank digital currency. They've been floating the idea for some time, but now somebody's starting to put some pressure on them. So that should be an interesting development. We'll see how that works with the Bitcoin drop over the last couple months. Just remember, everything's always planned. Nothing happens by accident. So anyways, we'll go over this real quick. We sold out two that were in the account. If some of you guys are wondering, we took profits not based on anything other than, I wouldn't call it a feeling, but or are they, I need to be on the right account here. So yeah, so we had CHKR, that's been one. These don't pay dividends anymore, but because they were positive, we just took them off. They did have 100 shares at the one HGTUX, that was an oil company, and CHKR is a trust. We still do have them in other portfolios that are underwater. Like I said, we never take a loss. So you can see let's see what we profited off of that. I think it was, yeah, but 97.32. That work out? Yeah, something like that. But okay, and this little disc right here, you can probably read that on screen. It's an SEC rule. If you get a percentage drop, they call it an uptick rule. Once that happens, they'll just notify you that certain things, short selling is permitted when the criteria are met. Short sales are in effect from the 16th of June till the 17th of June. So there's quite a few that actually hit. Look at here, CBD or CBT, and let's see what other ones were there. KALU, KALU, and yeah, that's not one, that's off another one. We'll go look at the other portfolio. You can see yeah, I think that was it. Yeah, let me go over onto this one. Sometimes you can't see them there, but they will be over here. But nope, nothing on this portfolio. So we still have on the larger account, I think it's in the 70s, but 16,000 still go back into the market. So we're good. Come on down. We've only put about 7 grand in the last week. But what does that affect? It affects your dividends that are coming in, right? So your dividends keep increasing. I don't remember what we were for the day. Looks like 97.32 is our profit. 0 dividends were paid, and so we're at 647. We still got 1, 2, 3, 4, 5. Looks like we got about 9 days left in this month. So we're a little bit behind, but that's okay. We continue to stick to the rules. We don't change anything. Remember, it's all about patience. You just let this market do its thing. Nobody has an answer for, if they did, everybody would know exactly when to get in. All right, that's why you make a plan. I don't care what your plan is, as long as you have a plan, and that's how you either learn from your mistakes. I've been doing this long enough that my plans work. Not every one of these will be successful. We know that, right? But if 99% of them are, we are a winner. That's the whole idea. We continue to hold our positions. We continue to bring that money in through dividends, no matter what's going on. You'll have a few that bump up, some hedge fund somewhere will, say, well, this looks like a good time to buy something. And, then it takes off to the upside. You'll see these large candles here, like this. I don't even know what this one is, SSB. Anyways, you can see we had a little bit more buying. We had 7 new trades. That just, some of them were DCA, some of them are new positions. I'm not going to go down through that. We can take a look and see. You can usually tell that's a new position. That's a DCA, 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 DCA. So you're just adding to those positions. So we had 1, GEF, and we go from there. Now, obviously you don't see any lines on here, right? Because you won't understand the strategy if I just stick lines on there. So you need to learn that kind of stuff instead of just following along, because I won't be on here forever. But Coke's an interesting one. Can come down, bounced off of that 50% mark, but you'll see that a lot on my charts. And it was like, wow, that's a real coincidence there. It's like that's all it is a coincidence, right? I have specific times when I want to buy based on research, not based on a guess. I don't say, oh, today looks like the day because for whatever reason you just feel like doing it, right? So, but yeah, let's just go down through. I think the cryptos are still, holding its own at around 20,000. I have no idea what it's going to do. Just like yesterday, just like 6 months ago, I have no idea what it's going to do. But we don't have any type of signals or anything else that are going to allow us to buy right at this time. So we just hold back. Just hold your cash in reserve. Don't look at that thinking, I've seen this before, or some guru online tells you, hey, now's the time to buy Bitcoin. Okay. Idiot sailor. I don't know when he's going to end up, pulling the plug, but if we drop below 20,000, I would assume that if it continues to drop at a rapid rate, he's either going to get, I don't know if he ever can get margined or not. There's a lot of talk about it. I don't know his portfolio. It's all very secretive. They say, oh, well, you can look at what he owns. And it's like, well, that may be true for part of it, but not all of it. So it's very hard to say what's going on there. I don't trust the guy. Make your own decision on it. It's more of a gut feeling. I mean, I've done enough research on this guy over the years. He's a dirtbag. He's a smooth talker, but all people like that are smooth talkers. That's how they make their money. And we've already seen that. Still no. So we're going back to March. We're 4 or 5 months now. Still no CEFs. We're still 16% above what the S&P is doing. Still no losses. And we will be changing this, as you can see. We got to wait and see what the tip rank shows us. That way I can make a change. If we're how it works is if you're at the 50,000 or above, it's 89.95, and then if you're above 100,000, so you can figure that one out for yourself. It doesn't go the other way, so it's kind of backwards, I know, but it's the easiest way to, if it's not like you're between, it's above this is what you pay. Anyways, that's neither here nor there. Just want to throw that in. But what you want to do is just forget about the market. I mean, you guys that are new, Had a couple questions while I was in court that I couldn't answer, but where's that one? Yeah, when you get your scans, the first thing you want to do is put it in as fast as you can, whatever strategy you're using. There's a total of 15 or 16 different strategies that you can use off of this scan. If you're just starting out, we want you to understand the basics, because all the other parts of all the other strategies from the 3 basic strategies work off of those. So if you're, you can make your own strategy if you want. It doesn't matter to me. I mean, I'm just trying to show you what works, but figure, hey, I want to do this, I want to do that, work it out. But then now you've got that time factor, and you've got to spend at least 6 months to a year. Don't back test. If you back test, it's erroneous information. You got to do it kind of on the fly, but you've got a good base here to work from. If you know that stick with the dividend paying stocks. Don't mess with Netflix or any of these companies that don't pay you a dividend, because if your money has to sit, you want to get paid. It's kind of like, oh, hey, I want to buy this house, and they say, okay, well, give us your money, and okay, well, I want to start charging rent. I pay cash for it, so I want to charge rent for it. And it's like, well, you can't charge any rent on it. Not, that's not the deal, but it's your house. It doesn't make any sense. Why not get something for what you're investing in? It doesn't matter how small it is, because remember, this is a numbers game. You think these guys at $1 million are putting all their money into one stock, one dividend paying stock, or the guys that have these massive portfolios in the billions, they might be buying into the growth stocks. That's pure speculation. But what I can tell you they are doing is they are speculating that way, but what they're doing is they're using options. And most likely, you'll see a uptick in the amount of selling of puts over the next couple months, because everybody's going to start saying, "Oh, I really think it's going to start going up," but monitor the put call ratios on each one. It's not like you can find put calls on all the stocks that are out there, but you're just going down a rabbit hole there. And if you're not managing at least a $1 billion portfolio, I wouldn't even be messing with those, because you're taking on way too much risk for your size of portfolio, and you will take losses. It's impossible not to, because unless you're just trading one contract, which trading one contract is equal to 100 shares of any one that is optional. So just keep that in mind. I don't buy 100 shares at a time unless I do sell a put. Now, these smaller accounts, I used one, I don't even remember what it was, probably 2 years ago, to show a client how to do it. And we went for a couple months just collecting the premium, and it expiring worthless. We get to keep the money. But then we were lucky enough to actually see it fall, the price fall, and we had to take possession of 100 shares. I can't remember what account it was on. I think it was BP, if I remember right. There's one in here that is way over the max shares, and even though it does pay dividends, I still wouldn't get rid of it. But if it ever does kind of, if the max shares come back in line with what we have, and we're above water, that green, light green shaded area, if we're above water, we'll sell the difference. So if it says max shares of 50 and we own 100, we'll get rid of 50. I don't really care how much to make on it, but what we're doing is we're readjusting our risk. And that's exactly what you're doing when you're DCA. And the people that say, well, you're just running it all the way to the bottom, aren't you? I said, yeah, and I'm taking dividends along the way. I was like, you're going to the prices are going to drop. That's just part of the market. The prices are going to go up. That's part of the market. Prices are going to sit still. They're not going to do anything. But the people that get hurt are the ones that are buying non-paying or non-dividend paying stocks. So you got to keep that in mind. You always want to be getting paid. So ideally, what will happen, what we'd like to see is all of these accounts, if we're fully vested, right? So this 16,000 goes in, and let's say, let's get a calculator right here, because right now we're probably around $800 or $900 a month in dividends. So if we have another 16,230, and what's the average? What's the average dividend on this? Hold on. Get it back here, up to the top. So this portfolio 8.13. So if it comes down, what happens when the prices come down? Your dividend portfolio goes up. So you can. This is going to be an approximation. This is not an exact science. Okay. So we're going to multiply that by 8.3%. So that's 1,300. Divide that by 12 months. So we'll get an additional 112.26. Now, you know, it's going to be in that ballpark. If you want to use that as the mean, you can go $10 on one side or $20 on one side and $30 on the other. So 92 to 122, somewhere around there. Who knows? You won't know because there's so many different variables involved, but you can make an educated guess as to how much you're going to bring in. So we'll be very close if it's $800-900 a month then that we already have in the market. Then we're going to add another 120 or 90. So just say 100. So we're right at 1,000. So we'd have a shortfall of 400 because we're not getting anything in trades. But that's still better than nothing. So if we had to go a full year at 8% on 70,000, that's about $8,200 just on one small account. Now, of course, we can break this down, and I can go at different levels all day long. We can go with $1 million, multiply it out. It's just numbers. So focus on what you're going to make, because once you actually get it, you never want to give it back. That's the whole idea. Once you take money out of the market, it's yours. All right. So all that money, like that 16,230, who knows what? That's just cash, right? So if we've already taken that out of the market, why in the hell do we want to give it back? I want to have that money working, but I want to work it smartly. I want to get the best value, and at the same time lower my risk, right? Or not lower my risk, but lower my cost per stock. So every opportunity I can get, based on rules, based on a plan, we're going to continue to make a better position. So when we do recover, if we recover, right? If we don't, I get to collect dividends. If not, so each month, if you're getting another 800 in, so what are you doing? You're continuing to buy more, and you continue to make your position even better. So this is where these CEFs come into play. Each month, if you're getting $500 a month in CEF payments, that's monthly payments, right? So $6,000 a year. You're buying more and more stock, and it just keeps lowering this average cost that you have. This is what we're looking to do. As long as we don't surpass the max shares, once we hit the max shares, that's it. You stop, right? And then you're still working off of the scans. The scans allow you know that the scans help you. They don't hurt you. But you've got to understand this is a long-term thing, right? We're still with no losses, and that's where we want to be. So just stay patient. Don't worry about everything that's going on. Nothing is gonna, nothing is going to make it worse. Only you can make it worse. You just have to have your plan in place. Don't worry about what everybody's talking about. Don't listen to the Jim Cramers. Don't listen to this. Don't listen to that. It's all meant to these guys, look, that's how they get paid. They get paid for making predictions. It's just like a weatherman. He gets paid no matter whether he's right or right or wrong. Have you ever heard any of these people apologize? Have you ever heard any of these people give you an excuse? It's a 50-50 bet, right? And if you don't understand money and you don't understand how to manage the money, then you're always going to be looking for that bet. And that's exactly what you're doing. You say, oh, hey, I'm looking at this chart and I put this line on here. And if it crosses this line, guess what? I'm going to buy. Well, if that's what you're going to do that for the next 10 years, right? And then you come up with an idea of how you're going to profit from that move up, right? You can do whatever you want. You can put a line down here. If it touches that line, I'm going to buy there. But you got to know how much money you're going to invest, and then how much how much it has to move for you to take profit. You have to know these things before you get into the trade. So simplify your trading, right? And simplify your strategy. It doesn't have to be that intricate. You don't win prizes, right? The only prize you get is to not lose any money. So I hope that helps. We'll be back at it on Tuesday. Remember, Monday's closed. Don't know, was it Juneteenth or something? I don't even know what the hell that is anymore. But anyways, later.